we're still very early in the fintech space. I have to say that we are still in the stage of doing things the incumbent should have done, but we're not in this phase where we do things that are really different.
Spiros Margaris is a venture capitalist, futurist, keynote speaker, and global #1 fintech influencer as rated by Analytica and Refinitiv. Spiros joins me from Switzerland to discuss his crystal ball predictions for fintech and artificial intelligence, also the future of jobs. Spiros, welcome to TCN TV.
Thanks for having me.
You advise investors when they're putting money into startups with growth attributes. When investing in startups, do you want to see a business already operating with products and clients, or can you be convinced perhaps that a startup offers something before any notion of proof of concept is there? What kind of startup do you like best?
No, actually, I'm only get involved with startups that have clients, because a client is a proof that their concept, their idea resonates. And if you have customers, that's the best proof. And if you grow fast, even better. But I don't go for startups that just have an idea.
Certainly. So when it comes to investments, the businesses that you're investing in, they are pretty high return, but also high risk. What lessons have you learned from those startups that you've backed that perhaps have failed to deliver? And is it as simple as being an active investor willing to cut and run?
No, I mean, once you're in it, with startups, there's no cut and run. I mean, you can stop reinvesting, but you're in it. So I write down every investment to zero in my mind. And then if there's an exit, the better. But I try to be objective, and I don't try to think about the numbers, but think about the business metrics. And if they accelerate, then I'm happy. If they don't, it's one of many. I mean, it always hurts a little bit, but you should stay as objective as possible.
Okay. And can you give us an example perhaps of a successful startup that you have recently invested in or are currently invested in?
Yes. I mean, one of the startups is Media Stalker AI. Basically, it's in the cybersecurity space, takes down illegal content like Champions League sports events. They find it within minutes and take it down, in 4 minutes. So because if the game is already played, then it's too late. So they have to find all people who stream it illegally. We have customers in Greece, Cyprus, Israel, and going globally, Brazil. Within 2 years, we grew quite a bit. And probably they're the leaders in their space. But it takes also some luck. I mean, we should not be too cocky. I mean, it takes luck, circumstances, the right place, the right time.
Perhaps looking closer at fintech now, in Australia and elsewhere, neobanks are starting to get key regulatory approvals, while the financial press is now giving increased coverage to banking and insurance fintechs. Their quest for customer growth and viability has been premised on more efficient production processes. But which global companies do you think are doing it best?
I mean, everyone hears about Robinhood. I mean, I can't agree on everything they do. But I know, I mean, they figured out through gamification and through the unique business model of charging no fees. Of course, there's always fees indirectly to acquire a lot of customers. I mean, Revolut does a good job. Starling Bank does a good job. I mean, there are some good players out there that know how to entice a generation to get involved with the financial market, like, as I said, Robinhood. But it's not all good the way it's done. But nevertheless, they do it very successfully, and it resonates with investors, it resonates with their clients.
So is Robinhood a company you wish you would have backed?
Yes, I wished. But, that's how it is. It's like... that's how life is. I mean, there's so many other opportunities. I mean, there's pure luck to be involved in such a company, But they changed the business model for a lot of people. Like a lot of brokerage provides zero fee trading. It all started with Robinhood. So they changed the industry, but we're still very early in the fintech space. I have to say that we are still in the stage of doing things the incumbent should have done, but we're not in this phase where we do things that are really different.
Well, look, a host of fintechs are now attempting to become new players in multiple market segments. How are you positioning your portfolio to maximize from the acceleration in the technology world post-COVID?
I'm globally. I have startups in London, Berlin, Greece, America. I think I don't even think that way. I think more, if the opportunity comes, I go for it. And if it happens to be a different continent, even better. But I don't diversify geographically. It just happened that I'm geographically diversified, but it's not a purpose, because I don't have to diversify my portfolio for risk. We're already in a high risk environment. It's just I diversify my portfolio on good startups, but not, and hopefully one or two will shine. Like WeFox is the biggest insurtech company in Europe, or the Canopy, which has a unique model for renters in the UK. You just go for such bets, but I don't think of diversification like I used to when I was a hedge fund manager, where because then you're responsible for other people's money. Since I'm responsible for my own money, it's a different responsibility.
Absolutely. Now, when it comes to artificial intelligence, it's seen as a way of reducing the cost of a multitude of financial services. It can efficiently perform many of the tasks previously done by humans, like asking basic questions about clients' risk characteristics. With the pressure on employment now rising globally, how would you advise the everyday employee, perhaps, to protect themselves from AI? And how does this advice vary to an investor?
Of course, as an investor, you probably think, how can I save money? Because whatever you save on money, turns out to be part of the profits. But as somebody who implements AI solutions, machine learning solutions, you have to give people a perspective, your employees, because some jobs are cut off in the middle office, in the process. But you have to give them a perspective by saying, and by doing, say, okay, we can train you to take another job, and this will augment your job, AI machine learning. Because if you don't do this, you will have passive resistance within your organization. They will say, okay, we're going to implement it, but it will be passive resistance, so it's not going to be implemented as good as it could be. So don't lie to your employees, and give them some other opportunities to grow within the organization, and then they will embrace it, or more likely embrace it.
And so on that note, if you were speaking to those people, where would you say that there are the opportunities of the future in terms of employment? There are many people now that are being told they need to reskill, or they need to go back and get a new education. Where would you be putting your time and energy into reskilling for what sorts of jobs in the future?
I mean, not everyone can code, become a coder and go into the AI space. I think human skills, emotional intelligence is important. There are a lot of jobs out there where we find opportunities beyond technology. I think but if you stay in technology, probably it would be helpful if you understand AI, machine learning, and how to use it, but the human factor should not get lost in the process, but it should augment, like an Excel. The Excel program allowed accountants, a lot of people doing things faster. It augmented their work. In the AI machine learning, we should always try to find solution that augments people's lives. So don't think people should be only coding. There are a lot of jobs. I think craftsmen, if I need a plumber, I'm not just for plumber, anything, or if somebody builds a house, it will be much more valuable, because those skills are very needed. And I think we hopefully stay diversified with the work we have and the opportunities we have. And I don't want everyone in technology, because it would be a poor world.
Absolutely. Well, thank you so much for outlining those opportunities, not only for investors, but all the people that are looking for their own future employment. And we'll certainly be watching to see how these technological changes impact the community and our whole global financial system.
Thank you very much for having me again.
And thank you for watching. Now, if you like what you see, like and share the video, subscribe to TCN TV, and drop us a comment. Tell us who you would like to see next and what you would like me to ask them. Or if you're an investor, send us an email so we can keep you in the loop with the latest ideas to empower.